I think overall, you look at the annual guidance, the annual guide that they gave was slightly lower than what the street had said. The first quarter is good. They typically guide, frankly, always a little bit lower for the year, and then they've typically met and beat. I thought it was a strong fourth quarter. I think the outlook is good. I think the first quarter outlook is good. And the sweat life that Lulu is known for, they keep gaining share. And don't forget, this year they're going to have Mirror in a whole bunch of their stores that should continue to drive attachment sales too. So I like the quarter, Sarah.
So I can't figure out, is this a reopening play or a stay-at-home play or neither? It doesn't matter. It's sort of a secular play.
It doesn't matter. It's a market share play, because when you have what's going on with the outdoors and with active, that's not just one and done. It continues. The expansion that they have, both with men's, with digital, with international, that certainly is powerful. You look at their balance sheet and think of what they're doing with add-ons. The Mirror opportunity that they have adds new consumers and drives existing consumers, because whoever takes any of the Mirror classes, they're going to buy Lulu clothing. And let's not forget that footwear is coming out later in 21 into 22.
Is that the value, Dana, of the Mirror acquisition as a sort of customer acquisition tool for the apparel brand, as opposed to perhaps being a great money spinner itself in its own right? I mean, it's quite a kind of busy marketplace now, that at-home workout portals. It
is, and what it also does, it gives you subscription revenues, so it gives you an annuity revenue down the line. I think all of these at-home fitness equipment items, I think it's part of the consumer's lifestyle. And so, yes, while you may get people going back to classes at some point, you're still going to get them doing the convenience of it in their own homes. And you think about the apparel that Lulu offers, which is expanding in categories, there's a stickiness to it.
So talk us through the valuation here, Dana, because the stock has cooled off from the highs. It's been dragged into the sell-off we've seen in a lot of the winning names, but still always commands a pretty high valuation.
Always commands a high valuation. When they announced their fourth quarter guide in January, basically coming in at the upper end of the expectations, not enough for what the bogeys were out there for the buy side. So now they met and beat the bogeys for the buy side, and I think you could have a new path upward. We've seen this stock trade 35 to 40 times, and frankly, with the new TAM that they have, both with equipment and apparel and other product categories, I think they're going to be able to maintain that multiple on higher earnings as they go. Let's watch international too. They just hired a new executive from Adidas who started in October. As that reopens, as China grows, that's a benefit for Lulu.
Is it your top pick in this space, Dana, or do you prefer any others?
I like the Lulu story. I think both Lulu and Peloton can win. I don't think it's either or between Lulu and Peloton. I think you can do both.
Who are they taking share from, Dana? I talked to Nike, I talked to Adidas. They all say they're taking share. So who are these guys taking share from?
You look what has lost in terms of apparel in the past year. It's been fashionable apparel and social dressing apparel. Let's keep in mind also that what Lulu has done with their On the Movement collection for travel and for commute and also for office, when we all do go back to the office, I think they're basically widening the scope. It's not just for activities of doing, it's for activities of socializing too. So I think they've taken some of the social occasion apparel and made it more everyday apparel, and that's where they're taking the share from.
The other number I just wanted to pull out of this report is that they've grown their direct-to-consumer business, which is mainly online, to about half of sales, a little more than that, from, what, 30% or so, where it was a year ago. Mm-hmm. Where does that put them against some of the other competitors and players in the industry?
Makes it a little bit higher. I mean, keep in mind, when you think of even last quarter, around 43% of their sales came from online. So it keeps increasing. I think the 50% number is definitely a big number out there. We've seen from some of the apparel retailers in general, it's reached around 44%. So on average, 50 is higher than the general apparel market.
Shepard Smith here. Thanks for watching CNBC on YouTube.